Well, hello, Accounting 1. As promised, I am going to record the solutions for Chapter 1 work so that you can check your work before you take the test, which is scheduled for tomorrow, the 12th. So, you were assigned to do the work together and the on your own. I did the work together with you. The on your owns are meant for you to try after I do the work together. So here is Chapter 1.1's work together response answers, which, like I said, I did with you. The on your own, this is simple math, guys. So remember always, if the assets on this side 23,000, then the 2 on this side must equal 23,000. So the 100,000, I don't think you were given one or the other, so you just had to split them up so they equaled 100,000. So that's 1.1. In 1.2, we have this chart. I think it was a little bit different actually in the Excel. It asked if the accounts were assets or liabilities, but well, let me think. Now I'm saying that. Yeah, it was set up a little bit different than this, so I should actually show you that. Let's see how the chart. Okay, 1.3, we did a balance sheet. This is what your balance sheet should look like. Remember, assets, they center it here. It makes it look better. If you don't do that on the test, that's fine. But I do want you to have all the parts labeled. So I want to see total assets. I want to see you have a total. Hopefully you can figure that double underline out in Excel. Then your liabilities, and you list your liability, the accounts payable account, and then owner's equity. I want you to list your capital account. So make sure all these parts are on the test. So the first application problem in your book was on page 1.1, and it was, again, just all these problems that you had to do the subtraction for to make everything balance. You have to think of the accounting equation like a teeter-totter or a seesaw, where if this side and this side have to be balanced so that nobody gets dumped off. Okay, now the kids that were in school on cohort A got to see me explain this, but I want to talk about this. In Excel, we have beginning balance, then you see new balance, and there is a row. Okay, rows go this way, columns go up and down. There is a row with, they look like little dashes in them. You are not to type in those rows because there are formulas there. So for the kids in class, I said to just like shade it out. So we took the little, in Excel, we took the little paint can and we highlighted that row and we dumped the paint can in there like a color blue to remind them not to type in that row where you see the little dashes. You type next to the number. So where you see number 1, that's where you post the transaction, okay? So that it will then do the math. You can see down here, it carried that 2,000 we added here, it carried it down. So it's keeping the balance for you, okay? So the first transaction was done for you. The second one was paid cash for insurance. You see we have paid cash, we have a negative 600. And for prepaid insurance, we have a plus 600. Now, when you put a plus 600 in Excel, the plus goes away, which is fine. As long as and when you put a negative 600 in, it doesn't keep the negative either. It puts parentheses, because in accounting, a negative number is parentheses. But you have to put the plus and the negative in. for the purpose of the calculation. Because you see, we have a $2,000 balance in cash, but when we do -600, it changes our new balance to $1,400 in our cash account, which is the right way, okay? So this number 2 is a good example of how you pay cash for insurance. Those are two assets accounts. One's a negative, one's a positive. They cancel each other out. There's no change to the teeter-totter, so nothing had to happen over here. But normally, like this one, where you bought supplies on account, you buy supplies, supplies goes up, accounts payable goes up. That keeps the teeter-totter balanced. You have a plus on this side of the equation, you have a plus on that. Next, number 4, you bought supplies on account from your company. So you increase supplies, increase how much you owe to your company, because accounts payable, remember, is a liability. That's money we owe, money we're going to pay back later. On the 5th, we paid cash on account to Swan Supply. So we pay cash. Cash goes down. The amount we owe Swan Supply goes down. Both negatives. Again, both sides of the accounting equation keeps the teeter-totter balance. And you can see the accounting equation is split here with this thick line down the middle. All right, on the 6th, we pay cash on account to your company. On the 7th, we pay cash for supplies. That's an example of one negative, one positive, same side of the equation. They cancel each other out, and the teeter-totter is not affected. And the last one was receive cash from owner as an investment. So we receive some cash, our cash goes up, our capital goes up, the amount, the value of the business goes up. So this side of the accounting equation, all these debits add up to both of these credits. It's in balance. And this is an example of what you have to do on the test, which is scheduled for tomorrow. You have to record these transactions like this, and then you're going to carry these balances into a balance sheet on the test tomorrow. Okay, here's another application problem that you were assigned to do. 1-3. Let's go over it. Number 2 was a pay cash for insurance. Cash is decreased. Insurance is increased. No effect on this side. On the 3rd, we bought supplies on account. Supplies is increased. Accounts payable is increased. On the 4th, we bought supplies on account from Miles Company. Again, increase, increase. Here's an example of 2 decreases. Paid cash on account. So cash is decreased. Accounts payable is decreased. And the last one is receive cash from owner as an investment. Cash is increased 1,000. Capital is increased by 1,000. And you see all the balances down the bottom. Remember again, only type in where the numbers are, in the row with the numbers, not the row with the balances, because there are formulas in there. The last thing you'll have to do on the test is a balance sheet. This little thing was just thrown in there to determine if you knew what type of accounts each thing was. This is not on the test, but we know cash is an asset, capital is owner's equity, supplies, prepaid insurance are both assets, accounts payable is a liability. Anything we own is considered an asset. Anything we owe for is considered a liability, and the capital account is an equity account. So then they had you write these if they are on the left side of the accounting equation or on the right side of the accounting equation. And if you've been in the accounting room, you know that the accounting equation is painted huge across the top of that one wall. Cohort B kids, I've only been there one day. Hopefully we'll see you again soon. Okay, and here's the balance sheet. Remember, on the test, you're going to take the balances on the bottom row, and they should be automatically calculated for you. As long as you don't type in the wrong rows, it should calculate the new balance for you. You're going to bring those balances into the balance sheet. Same with liabilities and owner's equity. If these two numbers do not equal, go back and check your work because something is wrong. Okay? Make sure you label your balance sheet at the top, the name of the company. You're going to put on the second line balance sheet. On the third line, you're going to put the date it was prepared. List your assets. This is a label, just shows. If you just listed them here, we'd say, what are these? You have to put assets. List them. It's only 3. Then you have your total assets. Double underline to show. In accounting, that means that's a total. That's the total. On the right side, you have liabilities. So you only have 1. You might have 2 accounts payable accounts on the test, but accounts payable is the only liability you've learned about. And those are vendors. Remember, those are people we purchased something from and we are going to pay later. Capital, we only have 1 owner right now because we're learning about sole proprietorships. So that's 1 owner, and their capital is the value of what they own. Remember, it's all of their assets minus what they owe. That's what becomes your capital or your equity. So you total them up. Got to be equal, guys. All right. Good luck on the test tomorrow. I hope going over these problems helped. See you soon.